Hello everybody, hope that you are good. This video is going to be a bit different because I'm going to map out all my levels, and only for today, but also for the next weeks, okay? We're gonna go from the weekly time frame all the way to the 1 hour time frame. I think that there is quite a lot of confusion about what the price might do next, and of course I don't have a crystal ball, I don't know what's going to do next, but all I'm doing here is to discuss my analysis, my opinions. Maybe you find them interesting or not, maybe they play out, maybe they don't, but this is what this platform is for. So in general, I see a lot of confusion in Twitter, on YouTube, on Telegram, and it's that I feel like most people don't really know where the main support and resistances are at the moment. So I think that this video is going to cover that, and of course some ideas, projections, triggers for day traders and swing traders. So let's start with the weekly time frame. In this time frame, I only want to mark a very strong support in my opinion, and if I put my indicator here, you can see here a very strong confluence between the weekly 50 EMA and the liquidity pool. The liquidity pool has been partially retraced, but for example, weeks, we can consider a week to be filled once it reaches at least the 50%. But with the liquidity pools, in my opinion, it's a bit different, okay? It needs to go to the 100%. So yes, this liquidity pool is still open, valid, I don't know how to say it, and it can still go to the 100%. If that is the case, then we also have there the weekly 50 EMA. Now, if you notice, that's a very important EMA, in my opinion, because it marks the trend, although it has a bit of lag. It tends to be a good reference to know whether if we are in a bull market or in a bear market. So as long as we are above the weekly 50 EMA, things are looking good to the upside, and as long as we are below it, then it's not looking that good, okay? For example, here you can see that we had a leg up, then we retrace to the weekly 50 EMA, we tested that level as support, little deviation there, okay? Then happens again here, we lose the weekly 50 EMA, and what happens? Well, that we start to test it at resistance. Then there is a deviation, but we test it again at resistance. So then it says, okay, that was a deviation, and it's gonna go down, goes down. What happens here again? Test it at resistance, another drop here. That was almost a 30% drop, I think. Reclaim the weekly 50 EMA, test it as support, another leg up. While you come here, little deviation, test it again as support, continuation to the upside. And now we're in a moment that it's possible that we test again the weekly 50 EMA, okay? If that is the case, then I think that it's way more likely that we test it as support again. But who knows? If you start to see that we lose this level and we drop below the previous low, that is telling you that the trend has changed. And you probably know that when we are at 48,000, 47,000, then yes, you can expect lower prices. But in my opinion, that is less likely to happen. Most likely that we start to test the weekly 50 EMA as support, maybe even a little deviation, go back above it, test it again as support, and continuation to the upside. That is what I think is more likely to happen, okay? If we go back to the weekly 50 EMA. It's not that far, it's at 51,700. Now, my doubts are more if we are going to go there or not. So that being said, guys, let's move to the daily time frame. In the weekly time frame, I've basically shown you what I believe is the main support in the chart. That's 51,700. I don't know if we're gonna get there or not, but all I want to say is that if we get to that level, that's actually $2,000 below the previous low. If you actually continue dropping and we go to 51,700, don't get too scared, because in principle that should be a strong support that price should be able to hold, okay? So yeah, main support 51,700. Now I've taken you to the daily time frame, so you can see the current structure and also the main resistance, okay? So basically we've been ranging here for more than 3 months, almost 4 months. So yes, almost pretty much 4 months of ranging. It's quite a long time. And we're gonna mark right now the range. So you have here the range highs. Let's get them there, okay? And then you have the range lows in this area, okay? So range highs, range lows, and also in here, I'm going to mark this quite strong resistance, okay, that we've actually left here an area without hitting, okay, and it's this empty area here. You can see that we didn't run those highs, so this area between 51,800 and 53,800, that's a very interesting area full of liquidity, so we could still get that, okay. Now what it seems that has happened is that we've broken out from the range to the downside, okay. And sometimes we can get deviations. Sometimes a deviation can look like this, but deviations can also look a bit deeper than that, alright? So I wouldn't consider this to be continuation, well, signaling continuation to the downside. Just because we're here, I don't imagine that we're gonna do this necessarily. This could still get a deviation. But what I have clear for sure is that 60,700, that is going to act as resistance in principle, because look at this, support, 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 support. Come on, if you get there, that's going to act as resistance. So I don't consider opening any swing long position until we reclaim this level, 60,700. So as long as we don't get above here, then it's pointless to open any swing long position, because I mean, this difference between 57,000 and 60,000, you could take it about, in my opinion, more as a day trade, okay, not as a swing long. Swing long should be longer trade, and in my opinion, yes, a range of $10,000, that's worth it for swing traders. So as long as we don't get back about 60,700, it's not really for any swing long positions, right? That's the main thing that I want to say. Now let's talk about imbalances. The chart is full of imbalances, but to be honest, we are retracing them quite well. So it's looking quite organic, I must say. And if you guys remember from the Bitcoin Zoom update, I posted that 3 days ago. Today's Tuesday. And if you remember, I was talking about this week here, because I was telling you guys, this week was my main concern at the moment. And I marked the 50% level. The 50% of the week has been filled, which means that this week there is no need to get again to the 100% of the week, as long as we stay far away from the 50% level. And so far, yes, like if you mark the 50% level, then it'll be somewhere like here, okay? This level here, that is, hang on, sorry for the clicking. This is the 50% of the week. It got filled almost 100%, and so far we are moving away from the area. We are $2,000 above the area. So now if price starts to do something like this, okay, going back to the 50% of the level and consolidating here, then that can signal that the next move is to fill the 100% of the week here, okay? But as long as we keep away from the 50% level, and that's what we're doing so far, then price can bounce and go to this resistance, right? So that main imbalance in the daily time frame has been filled. I must say that. And why it's not working there? And now we're gonna go into lower time frame, 4 hours time frame. In this time frame, what I see, which is quite interesting in my opinion, is this potential W pattern. And I just posted this idea on Twitter. Okay, look at that, which is quite interesting. And if we use the indicator, so I want to mark only the 50 MA, let's show like this, okay, and the liquidity pools, I'm not going to show them right now, so let's remove them. This is the 50 MA in the 4 hours time frame. As you can see, it's acted, since we've been going down, as a very strong resistance. You can see here, resistance, 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 here, variation, and then resistance, drop, and since then we haven't tested it again. So why not? The only way that I would open a new long, if I already didn't open a long at the 50% of the week, is if we can reclaim this level again, okay? And that is the 4 hour 50 MA. So imagine this is the 4 hour 50 MA. Let me change the color. What you want to see here is this, okay? a push above it, and then instead of continue going higher, then you want to see a test of support. If you get this test of support, then okay, then you have here quite a safe trade of maybe 3% move. Okay, so let me check. That's well, between 3 and 4% move. Okay, so yeah, that is, for example, an idea of a trade. Again, not for swing traders, but for day traders, yes, why not? And this structure so far can happen. Also, another variable is to turn this into a 3 taps pattern. Okay, but to be honest, for the timing, I don't see that that's going to happen, because we're already on Tuesday. We're gonna talk also now about the CPI data. But if you notice this projection here, what we're talking here about is something maybe more like this. And this retreat is, we're marking it for Thursday. Okay, that would mean that from Thursday we could see a push up. And in my opinion, that can only happen if this plays out, this W plays out, this leg up will play out only after CPI data. Why? Well, let me show you something that I typed for the Bitcoin Sunday update, and it's basically this. Let me make it bigger. We've had unemployment data released on Friday, 5 days ago, and increased again from 4% to 4.1%. Now this adds pressure to the Fed to cut rates, or if they don't cut rates, to at least announce a rate cut for the next FOMC meeting, which is in September. Now the next FOMC meeting is the 31st of July, the last day of the month, and then in August we don't have any. The next one is in September, because I guess they go on holiday. Now we have already a bit of pressure on the Fed to start cutting rates, because unemployment keeps going up, and that's a sign that that's screaming for a rate cut. However, the other very strong economic data is the inflation data, that's CPI, Consumer Price Index. That comes out next Thursday. Today is Tuesday, so basically in 2 days. And in my opinion, if the CPI data comes lower than expected, and lower than previous was 3.3%, now they're expecting 3.1%. So if it comes 3.1% or lower, like 3%, then guys, that's adding a huge pressure on the Fed to go the 31st of July. And the 31st of July, they have probably to make one of these two decisions, either to cut rates that day, which they don't seem very likely to, or what I do think that is more likely is that they say in the next FOMC meeting, it's very likely that we cut rates in September. And that's basically the word in the street. I think it makes sense. What I'm basically thinking, guys, is that the market tends to price in what is going to happen next. So I do believe that if we get a very good CPI data, then all the market participants, they're going to start thinking, okay, this theory of the Fed announcing rate cuts is going to happen, and that is basically going to trigger a leg up, okay? And I'm not talking about a massive leg up. Look at this, guys. I'm only talking about first this leg up of 3-4%, which is not that much, towards this resistance, okay? Now, if we manage to reclaim this resistance as support, then yes, we can continue going up. In fact, there is a lot of liquidations at 67,000. So that is basically what you need to pay attention on Thursday, in my opinion. That is, I wouldn't say a theory, but it's a potential scenario, okay? So yes, if we get a very good CPI print, then perhaps the market starts to imagine what the Fed might do next, because they're going to have to start cutting rates if that's the case, and market is going to price that in and push price up, okay? So keep an eye on this projection, okay? And on CPI data. Now, maybe that was a bit boring for you, talking about economy and the stuff, but let's go down to the 1 hour time frame. Let's get into the action. 1 hour time frame. It's been a very volatile week, and perhaps you don't notice, but these moves here, look at this. we've got this move down, then you got this move up, then again move down, then again move up. At the end, that's quite a volatile week, even without even noticing. So the first thing that I want to talk about is what, let me mark here the Asian session. Okay, now guys, something interesting. If you are using the indicator, there is around 600-700 people using the indicator. I've changed the trading sessions time, so take note of these times, because otherwise the chart, the indicator doesn't mark them correctly, the times. So I've changed into this, and in the second version of the indicator, remember that we are right now in the first version, this will be updated by default. Okay, so right now I'm playing with these times. Asia 1 minute past 12 to 1 minute past 9, then London 1 minute past 9 to 1 minute past 3, and New York 1 minute past 3 to 1 minute past 9. Okay, so copy these times if you're using the indicator, perhaps you find them more useful. So what I wanted to mention here is this. I've always told you something, guys. Never trust a pump during the Asian session, and that is something that continuously plays out all the time, guys, all the time. And not sure why, but I'm not even trying to find an explanation. All I know is what I see in the chart, and what I see in the chart is that whenever Asia pushes price up, then we get retraced within the next 24 hours. Okay, sometimes it's London, sometimes it's New York, and sometimes it's even Asia again in the next session. So you can see this pump here during the Asian session. Now that pump, let me mark the wick fill strategy, guys. Wick fill strategy. Okay, it loads pretty fast. 1, 2, 3, go. There it is. Okay, we had a wick here. That wick got filled. Well, maybe they then got filled by $5, but that's a bit of a slippage. But anyway, I'm not going to, if it's 49% fill or 50% fill, to me that's filled. No point keeping that wick there. So yeah, that wick's been filled. Now, then you see that pump during the Asian session. London retraces that wick. It creates another wick here. That is here, the 50% of the wick. Let me change this to white. That wick gets filled. You can see it there. Okay. Then price continue pushing up. Asia has again today pushed price up, and so far London is retracing that. So I would imagine that at least today we're going to revisit the 1 hour 50 MA to retrace the Asian pump there. Okay, but you can notice how everything is balancing out. They are filling all the imbalances. The only imbalance that I've noticed here that they haven't really filled is this wick to the upside. So why not? Why couldn't something like this play out? Drop again to the 1 hour 50 MA, retrace partially at least that Asian pump, because the Asian pumps don't have to be 100% retraced, although most of the time it does, but it could just go as low as the 1 hour 50 MA, retrace the Asian pump partially, and then continuation towards that wick there. Okay, and then you got yourself here. How much is this? 2% price difference? Yes, 2% price difference. You don't need more for a day trader. Okay, so that's an idea that I'm keeping an eye on for today. So let's see how price reacts first if we get to the 1 hour 50 MA, and then let's see the reaction. But that's an idea that I have in mind. Okay, all I want to show you guys is that all the imbalances are getting retraced, which is something very positive going into Thursday. Okay, because I remind you again, Thursday CPI. That theory, well, that idea that I mentioned could play out. Okay, this W pattern here, look at that. But for that, again, you know what you need? You need to get back above the 4 hour 50 MA. Once that's the case, you test it back as support, then yes, you can open a long, more happy, more comfortable into the $60,000 level. That is going to be a strong resistance in my opinion. Okay, so that is pretty much everything that I want to mention, guys. I think the video is going to be quite long, so I'm not going to show you the liquidation heat maps. I'm going to post them on X instead tonight. So anyway, guys, tell me what you think. I hope that the video is useful. Perhaps I also post a video about the altcoin market, or talking a bit about some altcoins like Solana, I don't know, Chainlink, the main altcoins. See what they can do in the next following weeks. But anyway, guys, today I just felt more like, because I saw quite a lot of confusion in the internet, I just felt like, posting a longer update, a bit more complex. I hope I didn't make you bored. But anyway, guys, I'm gonna wrap this up here. Thank you so much for watching, guys, and I'll see you soon.